Good morning friends, welcome to Ecoholics YouTube channel. Friends, my name is Avinash Agarwal and in this video I'll be discussing with you important current affairs for 23rd May 2024. The three important articles that will help us in answering three important questions today are first related to Jal Jeevan Mission. So in typically any exam that you will face regarding economics, there is a very good possibility that they can ask you questions based on flagship schemes of Government of India. For instance, in yesterday's discussion, we spoke about Manrega, which is an important flagship scheme under the Ministry of Labour, Government of India. Today, we will be talking about Jal Jeevan Mission, which is again a very important scheme that was launched in 2019 with the objective of providing a functional tap water connection to all rural households by 2024. It was a very ambitious scheme. We will be taking a detailed stock of the scheme and understanding what it has achieved and what are the gaps and how we are supposed to fill those gaps going ahead. In the second article, we'll be talking about RBI's bonanza for Government of India. RBI is owned by Government of India. RBI's surplus income gets transferred to Government of India. So RBI has transferred approximately 2 lakh crores to Government of India by way of dividends. It is double of what RBI was estimated to transfer. So how is this going to help the Government of India? What are the sources of RBI's income? These are the important things that we'll be discussing in the second article. And in the third article, we'll be speaking about the automobile industry in India's uphill challenge in terms of being able to reduce carbon dioxide emission from the products that they are creating, right? From the electric vehicles, from the conventional vehicles, from the hybrid vehicles, CNG vehicles put together, they're supposed to bring down the carbon dioxide emissions. So what are the targets? What is happening in Europe? Why is it such a difficult thing for Indian companies to achieve in terms of carbon dioxide reduction and all those things? These are the important topics that we'll be covering in today's article, in today's discussion, right? So good morning, everyone. Let us all start. Rashmi, thank you for joining in. Ningaja, good morning. Thank you for joining in. So let us start, guys. So first and foremost, Jal Jeevan Mission. So very quickly, important things about Jal Jeevan Mission, launched in 2019. Idea being that we want to provide fully functional tap water connection in rural areas. Okay. To be precise, launched on 15th August 2019. Right. The idea being that by 2024, we want to provide safe and adequate drinking water through individual household tap connections. That is what we want to do. Right. Moving ahead. The good thing is, and this is very, very important, I want you all to note this down. The extremely good thing is that when we started the scheme, there were only like 16.8% rural households who were having, let us say, a tap connection. Now we have approximately 76.6% of rural households which are having a tap connection, individual household tap connection, the kind of tap connection that you would typically have in an urban household. Like in my household, we have our own individual household tap connection. Water comes in kitchen through taps, in the bathrooms through taps, and so on. That kind of tap connection. So the number was around 17% when we started, and the number is around 77% now, right? So that's a significant jump. So this is an important statistic that has to be a part of any answer that you are giving. 11 states, they have been able to report 100% coverage. 7 states, they are behind the national average. Those states which had their own state specific schemes are doing better than others who did not have, let us say, a specific scheme for this particular area. Infrastructure push has definitely helped, but a lot more needs to be done. Now, how do governments assess the fulfillment of their promises, or how do they assess their schemes? So they get surveys done, right, through reputed agencies whose work can be trusted by various other organizations involved, because a lot of times these schemes are supported by Asian Development Bank, World Bank, etc. And these banks want proper surveys done by agencies which are reputed, whose data can be trusted, right? So the Government of India got this survey done by HTA Kantar, right? So HTA Kantar did a survey of 3 lakh households in 13,000 plus villages to see whether the taps are actually functional. Now you have provided the infrastructure, but is the infrastructure good enough? So what do I mean by functionality of tap? So they defined the functionality of tap as that the tap should deliver adequate quantity of water, adequate quality of water throughout the year. Adequate quantity means at least 55 liters per person per day water. Adequate quantity means that water should be drinkable, potable, and around the year taps should be able to provide this kind of service, right? What was the outcome of this survey? The outcome was that only 62% of the connections that were created are meeting all the three criteria. I want you all to note down this number. This is an important number, right? For certain states such as Rajasthan, Kerala, Manipur, this number was 40% or less. So there are areas, there are pockets where a lot of work needs to be done, right? So what is the clear conclusion? The clear conclusion is that infrastructure is great, fantastic, but a lot more needs to be done. A parliamentary standing committee report also said something on very similar lines. I want you all to note this down. They said that in February 2023, right? They said that in February 2023, right? There are 57,000 habitations in India in 2019 that were not having water quality up to the mark, and 38% of those habitations are still not having water quality up to the mark, right? In India, as you may be aware, that we have contamination because of iron, because of arsenic, because of fluoride, we have salinity issues, we have a variety of issues, right? So this is where the status is. Now, what is the problem in our approach towards, let us say, providing tap water connection? What is the problem in that approach? What is the inherent design flaw that you should be aware of? The inherent design flaw is that 80% of the works that we have done under, let us say, Jal Jeevan Mission, so we are dependent upon groundwater. And depending upon groundwater for providing household water, that is problematic for a variety of reasons. It is unsustainable for a variety of reasons. The number one problem is that 2/3 of India's terrain is hard rock. So groundwater is not very easy to extract out of a hard rock kind of an environment. Water doesn't get permeated and stored too much in that hard rock kind of an environment, and it is difficult to pump out, right? Secondly, only a tiny percentage of rainfall is actually making it into the ground. A lot of it, let us say, flows through the rivers into the Arabian Sea, into the Bay of Bengal. So we should be able to store a lot of water. We should be able to do a lot of rainwater harvesting. We are not there yet. So there is a lot of work that needs to be done on that front. In summers, groundwater levels are quite low. Tap water cannot be supplied through groundwater in summers in all the areas. 25% of India's districts are already classified as overexploited, critical or semi-critical, right? So groundwater extraction in these districts is going to be deeply problematic. Given the fact that the groundwater level has gone down quite a bit in a lot of areas, there is a lot of contamination now in our groundwater, arsenic, fluoride, etc. And your Council on Energy, Environment and Water, they are clearly saying that putting so much pressure upon our depleted resources, right, is not a very feasible solution. We need to shift our attention towards using surface waters, right? So that is where the design flaw lies. That is something that we need to talk about, that we need to augment our surface water sources, etc. And we need to think again about our reliance or over reliance upon the groundwater situation, and how we can rectify our groundwater situation is also something that we need to think about, right? Another very important problem in this scheme is that we are not having measurement, or we are not having primary data regarding what is happening at the household level. Whatever we are measuring, generally we are measuring at the village level. That at the village level, what is the quantity of water supplied? At the village level, what is the quality of water supplied, etc. That is the primary data that is getting captured, if at all. But that is not sufficient. As you know that in our villages, there is an inequitable distribution of resources because of casteism, because of inequality, and so on. So we need to measure things we need to measure what is happening at the household level. But we are not in a position to do that yet. That is something that we also need to do, a household level survey in and installing water meters at a household level is something that we need to do, right? So again, the conclusion has to be positive because a lot of progress has been made in the last 5 years. And the conclusion is very simple, that the scheme has provided, the Jal Jeevan Mission scheme has provided households with tap, 115 million households with tap connection since it started, and that is phenomenal progress. But a lot more needs to be done in terms of quantity of water supplied, quality of water supplied, and duration of the tap being functional throughout the year. So that is my first article discussed with you. there is a very beautiful infographic that will help you summarize this entire discussion. You can download this note from Ecoholics app. You can do a quick free registration, go to study material section, go to current affairs, and you can download this particular note and study from it, right? This is a very beautiful infographic that was provided. I'll move ahead to my second article. If there's any question that you all would like to ask, please feel free to do that now, right? So second article is about RBI's dividend, right? So what is this graph showing you? This graph is showing you the surplus transfer to the government on the left hand side by RBI over the last 10 years, right? And it is showing to you the government borrowing requirements on the right hand side over the last 10 years. So you can see on the right hand side that in 2012-13, Government of India borrowed approximately 4.9 lakh crores, right? And that number has risen to 16.9 lakh crores in 24-25. And throughout this period, you see that in general, RBI has been transferring a greater and greater amount in terms of dividend to the central government. So RBI transferred around 30,000 crores in 2012-13, and that number has dramatically shot up to 2.1 lakh crores in 24-25 going ahead, right? So that is the kind of important role that RBI plays in balancing Government of India's budget. That is the kind of important role that RBI is playing in keeping Government of India's borrowing requirements under control. Just imagine that if RBI weren't transferring this amount of dividend to Government of India, then Government of India may have to borrow even more than what it is already borrowing. That is a simple conclusion that you have to make regarding the significance of RBI's transfers, RBI's dividends to Government of India, right? So let's discuss everything in a little bit more detail, right? So this is a surprise dividend bounty, right? It's a surprise dividend bounty. Why? Because like I explained earlier, that earlier it was estimated that RBI would transfer 1 lakh crores. Now RBI has transferred 2.1 lakh crores, more than double. You can clearly see. So because of this kind of an approach, what has happened is that there is a cooling in bond yields. Why is there a cooling in bond yields? So see, Government of India borrows through the open market by issuing government securities. And Government of India has to pay a rate of interest, or Government of India has to offer a yield to attract investors towards its bonds, towards its securities when it borrows money, right? Now, given the fact that RBI has given such a huge bonanza to Government of India, there is a very clear signal to the market that Government of India doesn't need to borrow so much from the market going ahead, because we have such a huge bonanza sitting with us. So now if you want to invest in Government of India security, you will have to do it at a lower rate of interest, because Government of India is not, in a distressed situation. They are not in a difficult situation. They don't need to be desperate to borrow. They can borrow on their own terms. That is exactly what is reflected in the cooling of the bond rates, in the cooling of the bond yields. That Government of India now will offer a lower, let us say, rate of interest or lower return on its bonds, because it is not in that desperate situation anymore, right? Anyways, so the benchmark 10-year bond yield, they have gone down below 7%, right? And that's after this 2.1 lakh crores dividend that was announced by RBI, right? So this amount will be transferred. This is surplus from RBI's operations. This will be transferred to the central government, and it will help the Government of India meet its fiscal deficit target of 5.1% of GDP for 24-25. So for this running financial year 24-25, the fiscal deficit target that was set by Nirmala Sitharaman was 5.1%, right? And this kind of money transfer, it will be accounted in 24-25. So whatever dividend that RBI transfers right now, let us say, will get accounted for in the next financial year. So whatever transfers or whatever dividends RBI provide for 23-24 financial year gets accounted for in 24-25 in Government of India's books. That is what you need to keep in mind, right? So it's like Y and Y plus 1. So RBI's dividends for Y, that is 23-24, will get booked in Y plus 1, that is 24-25 for Government of India. So the financial year 24-25 that is running, therein our borrowing requirements will be under control. Therein we will be able to meet our fiscal deficit target of 5.1% because of this bonanza. So Government of India can do two things over here. With this money, they can enhance expenditure, maybe welfare, maybe subsidy, maybe infrastructure building, or they can cut back on their borrowing requirements. Either of these two things is possible. The good thing is that RBI has not taken any wanton risk in transferring this money to Government of India. RBI has first built up a strong contingency risk buffer, right? And then they have transferred surplus to Government of India. What is a contingency risk buffer? So contingency risk buffer in English, it basically means that it is like, how do you have fire extinguishers in your buildings so that tomorrow if there is a fire, then you are able to bring it in under control at a local level before you get support from outside, correct? So similarly, there is a contingency risk buffer that RBI holds, that if there is any problem in the economy, let us say that there is unexpected depreciation, or let us say that there are unexpected outflow of FIIs, right? Or if let us say there is some banks which are in difficulties because of asset liability mismatch or an NPA problem or a fraud problem, etc., etc., right? Then RBI can step in as a white knight. Then RBI can step in and save the day. It can help extract the economy out of that situation by using the fire extinguisher of contingency risk buffer. So contingency risk buffer, it's a provision fund which every central bank in the world holds, so that unexpected and unforeseen events can be taken care of. Typically 5.5 to 6.5% of balance sheet is is the size of your contingency risk buffer. So RBI was earlier maintaining 6% of its balance sheet as contingency risk buffer. This year RBI has gone from 6% to 6.5%. That means that we are going to the top max possibility of contingency risk buffer. Isse zyada we don't need to hold, right? So after going from 6 to 6.5%, whatever surplus remained has been transferred to Government of India. So RBI has behaved very maturely, very in a very prudential manner, so to speak, right? Now I just want to wrap up this discussion very quickly, this article, by outlining the various sources of income for RBI, because that is the only thing that remains that is important over here, right? So when RBI invests money in domestic and foreign securities, they earn an interest. If that interest rate is high, they earn a higher rate of interest. Like for example, in US securities, RBI, when it invests money, it earns some interest. Now, given the fact that inflation was high in US and therefore interest rate was high in US, so investment by RBI in US securities earned a higher interest for RBI. Same was the case for their other investments, right? Apart from that, they earn money through sale of foreign exchange, right? Apart from that, there are a variety of other sources, right? Like for instance, these are the important sources that I want to talk about. Whatever operations that they do in financial markets, whenever they buy or sell foreign exchange, whenever they invest in government securities, whenever they have other foreign currency assets, and if those foreign currency assets appreciate in value, right? Their investments in foreign central banks, their investments in top rated securities, the deposits that they hold with central banks, or the deposits that they hold with Bank for International Settlement, right? The interest that they earn when they lend on a very short term basis to domestic banks, the management commission that they earn when they help state governments and central governments take ahead their borrowing program. So these are the 7 to 8 sources of RBI's income that you need to be aware of. These are the important sources of RBI's income that you need to be aware of. Through these sources, RBI has earned this money, and this money has rightfully been transferred to the Government of India, who is the owner of RBI, basically, right? So this is the article that I have wanted to discuss with you. I hope that this is abundantly clear to all of you. If there is any doubt in your minds, you all can please feel free to ask, right? Otherwise, I will move ahead to my next discussion. My next discussion is regarding new emission goals that are being discussed, right? So there are two stakeholders involved, and there is one important terminology involved. The two important stakeholders over here are Bureau of Energy Efficiency on one side, right? And there is the second stakeholders is the group of automobile manufacturers in India, right? Your Marutis and Hyundai, then Tata, then Mahindra, and so on, right? So these are your two important stakeholders, right? And there is one important terminology, that is CAFE 3, right? And what is the full form of CAFE? CAFE stands for Corporate Average Fuel Efficiency, Cafe 3. So let me explain what Bureau of Energy Efficiency does. So all your electrical appliances, all your machineries, all your vehicles, etc. So what is the emission that they should do and how should that emission be reduced, etc. So that is exactly what Bureau of Energy Efficiency does. It tries to ensure that whatever you are using, whether electrical appliances, machinery, etc., they are energy efficient. They should be able to do the same work or more work using lesser and lesser energy and creating lesser and lesser emissions. That is what Bureau of Energy Efficiency helps you in achieving. It creates standards, it creates certifications, it creates mechanisms whereby you can go on this path of sustainability. Automobile manufacturers, they are original equipment manufacturers or OEM, right? And these guys, they basically create your conventional vehicles, hybrid vehicles, electronic vehicles, right? And they sell a variety of different vehicles. Now the thing is that if I am, let us say, a Tata Motors, I'm also selling petrol and diesel vehicles, I'm also selling hybrid vehicles, I'm also selling CNG vehicles, I'm also selling electric vehicles. So therefore, let us say that I'm putting out a fleet of 5 lakh cars in a year, or let us say that I'm putting out a fleet of 5 lakh vehicles in a year, meaning that I have sold, let us say, 5 lakh vehicles in a year. Let's say, right? Random number out of nowhere, right? So these 5 lakh vehicles which go out of my company in, let's say, 1 year, all these 5 lakh vehicles together has certain amount of emission, right? Now the Bureau of Energy Efficiency is saying that by 2030, the entire fleet ka average emission should be 70 gram per kilometer, right? By 2030, meaning that we don't care which kind of vehicle you are selling, how many electric vehicles you are selling, how many hybrid you are selling, how many CNGs are you selling, how many ICs how you are selling. We don't care about that. Only thing that we care about is that the entire fleet of vehicles that you have sold in a year, the average emission should be 70 gram per kilometer from your fleet. That can happen by 2-3 ways. You should increase the sale of EVs vis-a-vis ICE, or you should increase the sale of hybrids, or you should increase the sale of, let us say, CNG type of vehicles, and make sure that you are reducing the sale of ICEs, that is internal combustion engine, which uses petrol and diesel only, right? So if you want to come down to 70 gram per kilometer of carbon dioxide emission, right, then you need to change the composition of the fleet that you are selling. Increase cleaner vehicles, reduce dirtier vehicles. That is what you need to do. Now this is not easy to do. Why this is not easy to do? So automobile manufacturers are saying that the electronic vehicle technology in India is at a very nascent stage. We haven't done enough R&D. We do not have the necessary technological maturity. We do not have the necessary progress that needs to be happening to be able to achieve these kinds of ambitious targets, number one. Number two, let's say that we do have the capacities to manufacture electronic vehicles in a very big way, but the EV charging network or the EV charging infrastructure in our country is at a very nascent stage. It may be available in metro cities, but it is definitely not available outside of metro cities in a very big way. So that is again a very big hurdle. Number three, India is likely to be dependent upon internal combustion engine for some time. Even the government of India's target of electrification of vehicles is 30% by 2030. That we want that 30% of vehicles which are sold by 2030 are, let us say, electric vehicles. But reports by a variety of agencies, they tell us that that target is too ambitious. We may achieve 15%, right? Credible reports are saying that we may achieve 15%. So if you put these if you put these factors, if you put these constraints into your calculation, then achieving this Cafe 3 proposal, this is still a proposal, it has not been finalized, but achieving this Cafe 3 ka target of 70 grams per kilometer of carbon dioxide emission is not going to be possible. And if you are going to constrain the sector in such a bad way, then investments will not happen, jobs will not get created, there will be a lot of stress, there will be a lot of difficulty. And you know that automobile sector is a very important sector in India in terms of growth, in terms of exports, in terms of jobs created, in terms of taxes paid, in terms of sustainability. In every sense of the word, automobile sector is very, very important, deeply important. So this is exactly what the article is discussing. I've already explained everything to you. It's a new topic. That is why I first explained it to you, and I will quickly make you run through the topic. So what is happening is that your Bureau of Energy Efficiency is keeping Europe's targets in mind. They are keeping Europe's standards in mind, and they're trying to impose those standards upon India. And the OEMs are saying that this is not possible, right? We cannot achieve this because we do not have the necessary infrastructure, right? The idea being that the Bureau of Energy Efficiency, it wants to reduce carbon dioxide from vehicles in India. It wants to reduce dependence on fossil fuels, right? And therefore it is pushing for this target, right? And if you don't meet this target, let us say that we do establish this target and you don't meet this target, then there will be penalties for non-compliance. And the automobile manufacturers are saying that this will have a very devastating effect on sales, on jobs, on financial health of our companies. Our EV technology is very nascent and our charging infrastructure is very underdeveloped. You cannot put European standards in India because we do not have European facilities in India. We do not have European technology in India, right? What are CAFE norms? CAFE norms are carbon emission norms for the full fleet of a company. So a company is selling conventional vehicles, clean fuel engine vehicles, EVs, hybrids, small ICEs, CNGs, etc., right? So we look at the emission coming out from the entire fleet of the vehicles sold by company, and we want it to be at a particular level, right? If we are able to achieve the idea of 90 grams or 70 grams or whatever, then we will be able to reduce our oil imports, right? Car manufacturers are saying that in Europe there is a very evolved carbon trading mechanism in place, that if we overachieve, if we are able to cut down on our carbon emissions more than we have to, that means that we have done better than we had to do, and therefore we should be rewarded, right? So if I reduce my carbon dioxide emission more than what I should do, then I should be rewarded. So that's the carbon trading mechanism. That is what the carbon trading mechanism does. But that similar mechanism is non-existent in India, or it is not working properly in India, right? That is the problem, right? European Union is saying that we will completely phase out the sales of fossil fuel vehicles by 2035. India cannot do that. India does not have that kind of technological maturity. Our target is 30% electrification by 2030, which is unlikely to be achieved as per various reports, right? The point is that if right now CAFE 2 norms are being implemented in India, right? So 8 out of 18 manufacturers, they have not met the CAFE 2 norms requirements by 2023, and they are going to get a penalty of 1,000 crores. So our manufacturers are struggling with CAFE 2 norms, right? And now we are trying to go to extremely strict CAFE 3 norms. So that's highly unlikely, right? So CAFE 3 norms will kick in from 2027. CAFE 4 norms will kick in from 2030, right? Currently the target is 113, right? By 2027, right, we want to shrink it to 94 grams per kilogram, right? These are all very difficult targets, is what our automobile manufacturers are essentially saying, right? So this is what the broad idea of this particular article is. I hope that this is very, very clear. These kinds of articles, if you read on a consistent basis, on a regular basis, will help develop your thought process in terms of being able to tackle the kind of questions that you may face in the examination, in terms of being able to have the kind of qualitative discussion with your interviewer going into the interview. These are the kind of articles that you cannot mug up on the last day, on the last week, or the last month. Half an hour is what I want from you on a daily basis, merely half an hour. And if you do actually put in that half an hour, and if you're a serious student, then you will be having fantastic idea about what is happening in the Indian economy, right? This is what the goal, the objective of our discussion is. I hope that you are enjoying these discussions, right? If there are any doubts, you all can ask. I saw that somebody wanted to get in touch with me. So first, you get in touch with Ecoholics. What you have to simply do is that find out our email address and send a mail to us. Just write a simple mail to us that, okay, you want to connect with me, or you want to connect with Asavri, or you want to connect with Sanat sir, or anybody, right? And then the staff, our backend staff will, try to see when we are available. They will try to, book our time slot, and then they will try to, make sure that we get connected with you, right? So it may take some time, because typically all of us are also working, you all are also working, many of you are also working. So the matchmaking of time slots may take a little bit of time, but there is always a possibility that you can get connected with us. You can always try to reach out to all of us on LinkedIn. Most of us are also on LinkedIn. Today, if I want to reach out to anybody for my work, I reach out on LinkedIn first. So you can always try to do that for everybody involved in Ecoholics or anywhere else as well. So keep these basic ideas in mind. It was lovely discussing this with you all. I'll meet you all tomorrow again at the same time. We'll start our lecture around 7:30, 7:35 a.m. and we'll take it ahead from there. Right? Thank you so much for being here. All the best. Study hard. Take care and Jai Hind to all of you. Thank you so much.